Welcome traders, my name is Tomasz Wiśniewski and I'm a Chief Analyst in Alpari Research and Analysis, and welcome to the Daily Analytical Report with Alpari. It's Wednesday, and I would say that the most important movements on the market, we got on oil, on both Brent and WTI, and also on cable. This movement on cable is a little bit harder to explain, but I will tell you about everything later. And this movement on oil is influenced by the macro data. Apart from that, everything is going according to the plan, according to the scenarios highlighted by us, marked by us in yesterday's daily analytical report. So if you're following our videos, if you're following our webinars and our Twitter account where we post our trading ideas and our analysis published on other portals like FX Street, FX Empire, Investing.com, if you follow that, you should be just fine on the market right now. But let me show you the calendar. Usually when we see the calendar, I'm showing you only the most important news on the market, but this time let me show you API weekly crude oil stock change, which is marked with one exclamation mark, so low volatility expected on this movement, but what we got was actually a high volatility and a nice movement. That data was shown overnight, and look at number that we get, 14.2 millions, right? This is this number here, and look on the previous numbers, minus 4 millions, the highest one was 9 millions. So actually that is a huge beat in terms of the number, especially that previous one was 6 millions, which is showing that OPEC countries are cutting the output, but their place is taken by shale producers from America, for example, and other oil producing countries. Also, in addition to that, we got the data about gasoline demand, which is dropping heavily. So demand on gasoline is really low at this time of the year, and actually not only this year but in overall, which is showing us two things, that demand is slowing, and also supply was about to go lower, but it's not, because that OPEC cut is denied by non-OPEC countries. So the only result which we could get was a downswing on oil, and I will show that later, but first let me show you the most important data today. So again, Wednesday, we will have a Brexit bill's final vote in House of Commons today, which should be influential for the traders on pound, and also interest rate decision in New Zealand. But in addition to that, we'll have another news for the oil traders, so EIA crude oil stocks change. And I'm wondering if here we also will have a build-up which we saw today at night, yesterday at night, overnight in general. I said about cable that also we had interesting movement. Well, that movement was caused without any news whatsoever. Actually, some experts are explaining that this movement was caused by talks by comments from Prime Minister Theresa May. Her comments about about upcoming visit to China, and that they will discuss some trade agreements there. If there will be a Brexit, Britain will have to find good trade agreements with all countries. Good trade agreement with China will be very beneficial for British pound. So that's why we had a nice upswing on cable. I was also writing an analysis for cable today, which I published in FX Street. And I will tell you about the cable a little bit more from the technical point of view. You will see that the situation on cable is very optimistic. It's very good for buyers. Apart from that, from the fundamental point of view, we don't have any significant informations. I will show you everything on the technical charts. So we will start with oil. This is Brent, and as you can see, we got a nice decline here. On hourly chart, you will see the drop caused by API. Here and now, according to the price action, the price is trying to close the gap. But from the technical point of view, we do have many bearish signals here, but from the very beginning. So we had this upswing from the middle of November. The price was creating higher highs and higher lows, and the price created a head and shoulder formation. As the head and shoulder formation was denied because the price didn't break the neckline, and the price advanced in a sideways trend, creating a pennant. Then we got a bullish breakout from this pennant, which triggered a buy signal. But this buy signal, as we can see, was false. Luckily, we didn't open long position here because it would end up on loss. The price, instead of going higher, went lower, went below the upper line of the pennant. Broke a short midterm support, highlighted here marked here with a blue line, and then this API data came, and we went exactly to the previous neckline, which in the same time is the lower line of the pennant formation. Now we are closing the gap and aiming the horizontal resistance created by this support here on Brent. It's $55.10 per barrel. From the price action point of view, the movement that is very likely is closing the gap here and a downswing. Why? Because we do have this horizontal resistance, so the price may advance a little bit higher and then do something like that. Maybe I will change the color here to make it different from the midterm trend line. So kind of this movement is our base scenario for oil right now. This should be supported by a few technical factors like breaking this trend line, false breakout here, and a resistance and a horizontal resistance. So it is also supported by the fundamental point of view because OPEC agreement is off the table. We can see that cut is covered by non-OPEC countries, is covered by other companies, by shell producers, etc. And the demand for oil is not growing. Numbers for demand for the gasoline are decreasing, and we can see that there is no demand for oil right now. that would be it about oil. I will show you S&P 500. Now, where yesterday we were about to break this trend line, this resistance, but the price went down and actually tested the local support. So we can consider this as a local side trend, which lasts for the last 2 days, and most probably will be present on the charts today as well. And DAX. DAX also bounced from important resistance, bounced from the line connecting recent lower highs. This is also an upper line of the wedge formation, and the price is below the midterm trend line here, and I don't think that there is a buy signal on the market right now. For the buy signal, I would wait for the price to get to this checkpoint here to 11,640 points, and in my opinion, buy signal will be created only when the price will get here. So far, there is no buy signal on DAX. So far, it's a kind of a boring side trend. Now we can come back to currencies. On currencies, let me show you cable, because there is a very interesting situation on cable. On a weekly chart, you remember about this. This is bullish engulfing formation. Okay, bullish engulfing on a weekly chart, which created a buy signal. After this, the price went in the top point 320 pips higher. But that was it, and after that, in the last few days actually, we got a 360 pips correction, right? But this correction may be coming to an end, and we may be at the very beginning of a new upswing. Why is that? Let me show you a few things. Okay, like that. Why is that? We broke the midterm downtrend line. Also a horizontal resistance here. We tested it once, twice, and for the third time, what happened here? False breakout. That is a typical false breakout of different color, like that. This false breakout also aimed this trend line and tested it as a local support. On a daily chart, this false breakout created hammer. In terms of the price action, it's a pin bar. In terms of the Japanese candlesticks, it's a hammer. And hammer bouncing from a horizontal support and a trend line is a buy signal. Also, a false breakout, false bearish breakout is also a buy signal. Also, we are under the influence of this weekly bullish engulfing. I would like to also check Fibos, because yes, exactly 50%. We managed to retrace 50% of the latest downswing. Now the price is respecting also 23.6. I would say that the closest support is 38.2, but eventually the price should get there. So from here you have 160 pips stop loss. You have 200 pips first resistance, but the next important resistance, which in my opinion the price will get there, maybe not this one which I highlighted on a trading sniper. This is the long-term resistance, but first one, actually the second one. So the first one is here, 200 pips, 220 pips higher. The second one is 1000 pips higher, and the next one is 1500 pips higher. So this gives you an excellent risk to reward ratio trading opportunity. It looks like a risk worth taking. but it's obviously just only my opinion. It's not a recommendation because we cannot give recommendations. That is just an opinion about the current situation on the cable. Okay, that was a cable, British pound to American dollar. Next instrument is American dollar to euro to American dollar, and it happened exactly what it's supposed to happen. We had this breakout that we were telling you about yesterday. Then technical comeback. Price touched the trend line and the horizontal resistance and created two pin bars, two shooting stars. After that, the price went significantly lower. That was a good trading opportunity for short-term traders. Stop loss 20 pips, potential profit 50 pips. That was a good movement, but still this position is on. Sell sentiment is still present. Is still present on the chart. Well, to sum up, as I said, there is higher demand for dollar, and this should last for some time. I don't see any buying opportunity on euro dollar. What I see on euro dollar is a sequence of lower highs and lower lows, which is characteristic for a downtrend. So short positions are on the table right now. Silver, we put our analysis about silver on investing.com. We are saying that most probably the price will advance higher. When was that? I guess it was on Monday, and the price advancing higher, putting high pressure on the horizontal resistance. It looks like this movement will be continued. A quick reminder why. Inverted head and shoulder formation, breakout of a neckline, then test of this neckline as a closest support, then the price broke the trend line here. The price advanced higher, broke this trend line. We use this trend line as a closest support. I'm sorry, and then the price created horizontal resistance, which most probably will be broken anytime soon, because that's what the sentiment is. And even with the stronger dollar, precious metals, silver and gold are behaving very good. It's kind of surprising because precious metals were strongly influenced by the price of the dollar. But even with that, we can see that the demand for precious metals is quite high, even if American dollar is stronger. And this is Australian dollar to American dollar, real star of the latest price action. Why? Those rectangles are the same, all of them, not in terms of length, but in terms of depth. All those corrections are similar, not the same, but are similar, and all of them are around 70 pips, right? This rectangle is set for 70 pips. For example, this one was a bit longer, this one was 80 pips. For example, this one was a bit shorter, this one was around 65 pips, but more or less it's 70 pips. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That one from yesterday. Look, 75 pips. But also it used not only correction equality pattern, but also used the trend line, uptrend line here, but also horizontal support here. Exactly the same price. And then from this point we got a retracement, 35 pips. But I always like to see the history of trading. What can I see from the history of trading here? is that every single bounce resulted with a V-shape retracement. Fast reaction, very fast reaction here as well. 9 of those corrections resulted in a fast retracement. But here we can see that the price is putting pressure on this support. So it might be the first sign that the correction equality pattern is over, and most probably the price will finally break the neckline also along with the horizontal support here, and will create a strong movement, a strong downswing, like for 100 pips or something. For example, the next horizontal support is located here, so after the breakout we are having 70 pips downswing here, right? This reaction for the first time in 10 times, in 10 corrections, looks different. It looks like potential for a downswing. In addition to that, it's worth mentioning that Australian dollar is highly correlated with gold. So if there will be a higher demand for American dollar, this pair will go down. But if the gold will advance higher, this pair will be supported by the higher prices of gold. It is hard to say which side will be taken. Here what I'm trying to tell you is that yesterday we spotted a nice trading opportunity for a long position, which happened actually. But now this buy signal is fading, and there are some chances for a bearish breakout here. I showed you silver. Now I will show you gold, because on gold we do have we are on the new yearly highs, year-to-date highs today, as you can see with this candlestick from the morning. We are also on the highest levels since November, and we are approaching 50% Fibonacci. To 50% Fibonacci we still have $10. It's also a psychological resistance on $1,250. It will be a strong resistance here. Most probably expect a profit taking action and a bit of retracement here. Not a retracement that it's end of the upswing, but at least, for example, at least maybe movement to 23.6. So an upswing here, correction here, or maybe deeper to 38.2, and then upswing again to the trend line, right? I don't think that we will have a small retracement, like when the price will get here and retracement for $20. No, I think it can be deeper. It can be a retracement for $30 or even more, but there still will be a bullish sentiment on gold. It looks very, very promising. American dollar to Swiss franc, we also said that there is a potential for an upswing. So far the price defended this support, did not make higher highs and higher lows, as kind of stuck in a side trend, but it's still it's very optimistic as long as we stay above this level, above this support on 0.9950. The sentiment here on American dollar to Swiss franc is positive. American dollar to Japanese yen is defending 38.2, but it does not look so promising. There is a support like that. It's kind of a wedge, but this defense on 38.2 Fibonacci level is not convincing. At least it does not convince me. American dollar to Swiss franc, again, we are telling about the possibility of a breakout here. It didn't happen, and now the price is retracing a little bit, but definitely sell signal is off the table. Well, there was no sell signal actually. I said that there will be a strong sell signal once we will be able to get here. The price did not get here, so there was no sell signal, but we can see that the price is still, well, not still, but advancing lower now. But we cannot say that we have a sell signal here because it's just a normal correction of the recent upswing. And Canadian dollar to Japanese yen, still waiting for this wedge to develop, but finally there is something going on here. What's going on is yesterday candlestick created a hammer. Hammer itself is not a strong trading signal, but hammer on a horizontal support is. Is that a horizontal support? Well, yes it is. As you can see, it was support here at the beginning of December, then 23rd of January, and now again. If the price had a chance to touch the lower line of the wedge, if they will fail to touch the lower line of the wedge, and also they will fail to create a lower low, because well, correction in an uptrend is higher highs and higher lows, and correction of an uptrend is lower lows and lower highs. If they will fail to create another lower low, that will mean that the buy signal is very likely, and there are high chances that the price will advance higher, and in result they should break the upper line of the wedge along with the horizontal resistance. A few words about this horizontal resistance. As you can see, it was a support in September. Also in August and September, after the breakout, it became a resistance in December, and then after that in April, and it's 2015, 2016. It was a resistance in December 2016, in January 2017. So as you can see, this is a relevant level in 3 years, 2015, 16, and 17. So price getting there will be something huge for this pair, and breaking this level will be something very significant for this instrument. What's the main trend here? I would say that after breaking this line, well, first we broke this resistance, then this one, and after breaking the second one, so this resistance, the sentiment here is positive. The sentiment here is positive, and actually I will think a little bit longer if I should open a long position here using this horizontal support, and the price being inside of a trend continuation pattern. And if it's trend continuation pattern, because wedge is a trend continuation pattern, trend should be continued, and trend is bullish, as we can see here. In addition to that, Fibos, well, Fibos are not significant here. That would be actually nice if we could see the price going here to 38, maybe another color, okay, to 38.2 Fibonacci level, also lower line of the wedge, also a long-term trend line here. If I would see a bullish hammer on a daily chart, or for example an engulfing, that would be a significant trading signal for me. But so far it's not happening, but overall sentiment here looks alright. So to wrap that up, sell sentiment, bearish sentiment on euro dollar, positive sentiment on silver, mixed sentiment on Australian dollar to American dollar, positive sentiment on gold, positive sentiment on American dollar to Swiss franc. Here mixed, here mixed, here positive, and few words about few words about commodities and indexes. On brand, negative sentiment, S&P 500 mixed, and DAX also mixed. So few trading signals. We got few trading signals on the current market, so I think everybody should be happy. Remember that trading and investment in financial markets involves an element of risk. Stay safe on the market. And also, again, follow us on Twitter and our website alpari.news for the fresh trading opportunities and top-notch trading ideas. Thanks very much and goodbye.